Welcome to Larking Gowen Insights, accountancy and business advice for all, a series that gives you bite-sized tips and guidance on tax, funding, legislation, reforms and much more. With case studies, business advisory and sector specials and even interviews, our team of experts are committed to helping you navigate the world of accounting and finance with a variety of presenters from across our specialisms. So, let's get on with today's show.
Hello and welcome to our podcast. Thank you for joining us. My name's Gilly McGill. I'm a VAT Director at Larking Gowen and I'm joined today by Dominic Carter, one of our partners in tax at Larking Gowen. We are talking today, Dominic, about HM Revenue and Customs nudge letters, what they are, why they do them, and what we should do in response to them should we or our clients receive one.
Excellent. I suppose the first thing that I would say from my standpoint as a predominantly an advisor to businesses and their owners is that the term nudge letter is quite a wide one, covering a range of letters or communications from HMRC. And a lot of people use this term to really cover that full range of communications. There is another expression that's sometimes used, which is one too many letters, which I think that's a really helpful, probably more accurate way of describing them. And really, I think the way that I would see them is these are any letters that are issued by HMRC which are not personalised to a particular company or individual. They're just sent out based on information that HMRC hold to cast the net out there because of something that HMRC have identified, potentially based on data that they've acquired through the tax returns or through some other means. And they've identified something there which might be a potential problem or might indicate a potential inaccuracy with their returns.
So they're looking at a particular set of characteristics for that business or individual, are they? So something that they have reported or a way in which they operate their business?
I would say so, yes. Typical examples of some of these nudge letters that we have had from HMRC have included letters sent to claimants of COVID-related financial support, the furlough scheme, for example.
Yeah.
They were very prevalent at the time that that scheme was in operation and shortly afterwards. There's clearly widespread capacity for inaccuracies to be made in claims, as well as the widely reported fraud as well. With the fast changing guidance that was issued, lots of companies were in a position of trying to juggle that at a time of great difficulty, and not unsurprising that errors were made. And equally, given the government's intention to get that scheme out to as many businesses as quickly as possible, there was also fraud as well. So HMRC used nudge letters as a means of prompting taxpayers who'd potentially made errors or potentially used in fraud cases. I guess we know less about that.
So are they, obviously it's areas then from what you're saying where HMRC believe there's a potential under declaration of tax of some sort or another, or inaccuracy in the returns that have been submitted to them. And is this replacing the traditional visit from an HMRC officer or letter specific to you and your circumstances, asking questions about your business or your personal circumstances? Or is it in addition to that?
I think it's just one of the things that HMRC have got in their armoury now. I guess in terms of HMRC trends over the last sort of decade or so, two of the things that I would think of would be the declining amount of resource that HMRC, human resource, and perhaps the increasing amount of data that they've got at their disposal. So, you know, when we started in tax, HMRC interventions would have involved an individual identifying a potential problem, whether that was on receipt, following receipt of a tax return, they'd reviewed it and they thought there might be some problems or issues with that, or through a visit for
Yeah.
PAYE or VAT purposes, which identified potential failings. So that was the way, but that's a very labour intensive way of doing things, and with a declining number of inspectors, that's going to
Yeah.
be difficult to do, and it also doesn't really necessarily target the resource on the right cases where there's greatest capacity for, say, underpayment of tax. So what HMRC have had, and in my world of predominantly corporate tax, is a lot of tax returns filed since 2010 or so through IXBRL submissions. They've got IXBRL tags attached to corporation tax returns and the accompanying accounts, and from that they can identify trends and things which they believe to be out of place. So some of the things that we've seen recently in the world of corporate tax have included letters sent to companies who have been paying their corporation tax and the normal payment date of 9 months and a day after the year end, whereas HMRC have had some information suggesting to them they should have perhaps been paying by quarterly instalment instead. So
Okay.
that's been one that's come up. We've had targeted inquiries into companies claiming the super deduction, which is the enhanced 130% first year capital allowance that was available for 2 years until the end of this March, with some quite complex rules and restrictions. HMRC in particular had been looking at indicators in returns which might suggest the claimant company wasn't entitled to it. So, for example, if there was obvious indications that plant was being acquired second-hand, or that the company had its trade or part of its trade was involved in leasing, because there's an exclusion from claiming super deduction if you're acquiring plant for leasing or hire. So that's quite a good targeted approach, and based on information that they could readily ascertain from the taggings in the accounts and the computations. And another one probably from the world of personal tax is a number of nudge letters in relation to claims for entrepreneurs relief, now business asset disposal relief from the sale of businesses, where HMRC had looked and identified that potentially claims had been made by individuals who were in excess of their lifetime limit. And that limit obviously came down from £10 million to £1 million in 2019, having moved up. So there's been a complex variety of lifetime limits, and HMRC have obviously got access to the information about what people have cumulatively claimed, and that enables them to raise these quite targeted letters.
So they really are starting to reap the benefits of all of the data and the move, as you say, to things like IXBRL and making tax digital as that continues to be rolled out across the taxes. And I guess they will be able to be more targeted and potentially be more efficient in time. But is it right to suspect that in the meantime, whilst they're still getting to grips, there might be some nonsense scenarios that the data throws out because of that lack of human intervention and human knowledge? So we've had in the VAT world, that you'd have seen it in the press, 13,000 VAT registrations applied for a particular individual's own house, and the data didn't throw that out as a problem, and it was only when humans looked at it that the issue arose. And are we having the same sort of things with nudge letters at these still relatively early stages?
We certainly are. I mean, we've seen some ones which, in my opinion, are very good, and that doesn't necessarily mean that HMRC have hit the nail on the head, because they've got incomplete information. But to me, some of the examples that I've given, if one of my clients received a letter asking them about the validity of the super deduction, or suggesting that they might not have claimed it correctly, and they've claimed the super deduction, then that's a fair challenge. We can then consider whether the claim is right or incorrect and act accordingly. And same on that targeted example of entrepreneurs relief or business asset disposal relief lifetime limit. So I would consider those to be good use of this type of resource. The quarterly instalment payment ones, which we've seen, some of them have been really wide of the mark. We've had client companies who are dormant with no income whatsoever, receiving nudge letters from HMRC suggesting they should be paying their corporation tax through quarterly instalments, and they haven't even
Which
got a
is
liability. They
nil
haven't even got
anyway.
any
Yeah.
taxable income. So we are seeing a mixed bag
Yeah.
of things really. I would say, and no doubt their use of the data will become more sophisticated. It will always require at some point some human intervention to take things forward. Part of that will depend on how people respond to these letters, but it's except in cases where it's absolutely clear that there's been an error in a return that's prompted by HMRC having raised the inquiry and the taxpayer or their agent files an amended return. It's always going to involve some human intervention.
Yeah. So what's our recommendation then when clients do receive these sorts of communications from HMRC, because they're not quite, in the full regime of the legislation which governs HMRC inquiries. So you're in a bit of a no man's land, aren't you? What's our recommendation there?
I agree with that. I think we are not, well, we are familiar with HMRC going down this type of route for a number of years, not in the sense of these nudge letters, one-to-many letters, as we've been calling them, but in the sense of letters that have been issued to taxpayers as an alternative to raising a formal inquiry. So we've probably seen this for 10 or 15 years,
Yeah.
where HMRC have gone through phases of, rather than writing a letter to a taxpayer saying we're opening an inquiry into your corporation tax return for this period, and here are your rights, and here's how the inquiry works, and here are our list of questions and requests for information, that they'll instead send a letter out that sometimes used to look an awful lot like that, but it just wasn't on a statutory footing.
Yes.
But that's not a one-to-many letter. That was, although it might be characterised a nudge letter in that it didn't have a statutory basis behind it, it was a letter that was clearly one-to-one, addressing that specific business or taxpayer. And I guess in that situation, the approach I'd always taken, rightly or wrongly, is that clearly there is something there that HMRC are going to follow up on if they don't get the response they want. And in most cases, I would have been encouraging clients to allow us to respond on their behalf to the HMRC letter and to address the matter. My only concern I often would have in those circumstances was that how far HMRC would take that before raising a formal inquiry. If it was a question of them writing a letter because there's something that had come up that they needed an explanation on, and that was probably going to suffice if the explanation was a good one.
Just for clarity on a particular filing position.
That's it. Yeah. They haven't got the information they need to be comfortable with the return, so they raise a query on one particular item as an alternative, really, to going for a full-blown inquiry, because that imposes certain obligations on them as to how they open, deal with, and close the inquiry. So this seemed, always seemed like quite a reasonable approach. But as I say, when it's sometimes lapsed into multiple letters back and forth rather than a single letter covering a fairly targeted area, that was the point when the taxpayer really needed the protection of can you please open a formal inquiry, HMRC, because as we say, that did provide some formal protection and ability.
And that might be something that we would actively request. It seems almost counterintuitive, doesn't it, to say to HMRC, please can you open a formal inquiry, but as you say, it moves you into having those protections with how HMRC has to behave. And also, if you are a taxpayer who has insurance to cover the fees that you might incur for inquiries, you're more firmly within the space where you can make a claim on your insurance, aren't you? Under a formal
I think
inquiry.
that is absolutely right. for all of those reasons, there was always a point at which you would have wanted HMRC to do that if they were going to turn a limited query into a much more detailed intervention. And the reason I mention that is that I think some of the same issues are brought up when the current nudge letters, what the one-to-many nudge letters, are discussed. And you quite often hear people say things like, well, we don't have to respond to it. There's no statutory basis for it. And my personal view is I think that's quite a flippant response to give. You've really got to think about the specifics of the case before you can really decide what to do. But I don't ever really think doing nothing is a great answer. I mean, if we walk through what the possibilities are, the first one must be that HMRC's letter leads to a realization that there has been an error on a return. And in that case, the error must be corrected. It's not a taxpayer can't take the view that there's an error in their return, they acknowledge there's an error, but they're going to do nothing because these letters have been sent out to a great many taxpayers and HMRC may not get round to making an inquiry into their particular return.
Being in that position leaves you in a very sticky predicament with respect to penalties, because then you are actively, as you say, ignoring the fact that there is some tax due to HMRC.
Yeah. I mean, not wanting to shamelessly promote ourselves, but we did a rather good podcast on the subject of penalties.
So we did.
Prompted and unprompted disclosure. And I think this, as you say, issue is directly relevant to this, isn't it? What you really want is to have gone back to HMRC, and I don't know whether they would treat a correction of a return in response to a one-to-many letter as being prompted or unprompted disclosure, but it has to be a good thing that you have gone back and addressed the issue, corrected the error. So I think that that is the right thing to do in those cases. I guess then you get onto areas where HMRC are perhaps clearly mistaken, and whilst I said normally I'd suggest a response, if it's the sort of issue where a dormant company with no tax liabilities receiving a letter saying
yes,
should have considered paying your tax earlier, I wouldn't think there's anything wrong with anyone putting that straight in the bin. But that said, there are cases that are perhaps slightly less clear-cut than that, where we have gone back to HMRC and thanked them for their letter and said, well, we considered this at the time, we've reconsidered it in light of their letter, and we can see no reason why that would be the case. Just feeling that if there was something HMRC had spotted, unlikely as it seemed, that we would be in a good position.
It gives them the opportunity then to reveal the card that they have up their sleeve, doesn't it? And then we're showing that we're fully cooperating, aren't we, and open in dialogue, which is always a good thing as far as HMRC is concerned.
Absolutely, and we have said that to them each time. We said, if you've got information that would lead you to believe that, let us know, and we will re-examine it again. So we'll try to be cooperative. I guess then you probably get into the areas where HMRC have identified something based on the information they've got, and it's reasonable, but actually we know more about the client's specifics, and then again we would tend to go back to them and explain that and why that's not in point in that particular case. And then you probably get another type of situation where you're happy with the position that you took, but there is some scope for doubt, or alternative interpretations may be possible.
Yes.
And I think in those cases as well, again, a response to HMRC, perhaps not giving chapter and verse, but at least sufficient of an explanation to make them aware that you've read and understood the letter, and are satisfied with the filing position.
And have taken reasonable care. Again, that catchphrase that we have laboured on in past podcasts, but yes, that you've got a reasonable filing position that you've taken care over, and if you've involved your advisors, have taken professional advice with it.
I think that's absolutely it, isn't it? And then you'd feel that if HMRC did have a different technical interpretation, the worst position you ought to ever be in is that they would, you would have it would end in an inquiry, and worst case scenario, HMRC's view would prevail because, for example, there wasn't enough in it to justify the client going to tribunal over it or whatever. And the position's been dealt with in an open and transparent way, and you would think that there can't be any question of penalties in those circumstances. And again, I think the fact that you've gone back to HMRC and explained the reason for that must be helpful when you do get into those subsequent discussions.
From discussions that the industry has had with HMRC, that we are expecting one of the first VAT sector nudge letters to be issued over the summer months. So I shall certainly be coming to you, Dominic, with your experience of actually dealing with these to understand how best we handle those for our clients. And in that particular case, they've been driven by HMRC success through the courts on a particular issue. So not free from doubt in it by any means. It will be interesting.
Oh, and they've got the ability through information recorded on VAT returns to identify clients who are potentially affected by the same issue that's been tested through the courts.
Yes, exactly. So it's interesting times for us all, isn't it? It's always a challenge when HMRC practice changes and the law develops, and it keeps our lives interesting, I guess.
Very much so.
Thank you for your insights, Dominic. Hopefully that's been of interest to those of you listening. If you receive a nudge letter and you would like some assistance with it, please do get in touch with either myself, Gilly and McGill, or Dominic Carter via the Larking Gowen website. Thank you.
Thank you.
Thank you for joining us for Larking Gowen Insights, Accountancy and Business Advice for All. Don't forget, you can find more information about today's topic and more about how our team of experts can help you in your business by visiting our website, larking-gowen.co.uk. Join us again next time for another fascinating insight into the world of accounting and finance.